Hello and welcome to Niche to Necessity, your go-to podcast for everything tax and accounting in the realm of Web3 and digital assets. I'm Taylor Zork, and every episode we sit down with the top finance professionals and CEOs from the world of Web3 to dissect the latest developments, solutions, and best practices in this rapidly evolving field. Our mission is to demystify the complexities of digital assets and blockchain for tax and accounting professionals. Whether you're deep in the trenches of Web3 finance or just starting to explore the impact of digital assets, this podcast is designed to keep you informed and ahead of the curve. Today, we have the pleasure of speaking with Pat White about enterprise digital asset accounting. Pat is the co-founder and CEO of Bitwave, the leading digital asset finance platform for enterprises. Bitwave automates accounting and finance workflows to enable seamless regulatory compliance, streamlined payments, and unified data with a modern connected platform. Pat is a recognized software engineering leader and a serial entrepreneur with over 10 years of experience building enterprise software at Intuit, Microsoft, Five9, and Fortify Software, now HP Security. He launched an enterprise software consulting firm, Ally Software, in 2009, and then later created Sonata, an enterprise search engine that Cisco acquired in 2016. Pat is deeply involved in the cryptocurrency space, contributing code to both Bitcoin and Ethereum, among other Web3 projects. He is the co-host of the DeFi Daily podcast and a University of Southern California graduate. Welcome, Pat.
What's happening? I'm gonna have to update my bio. I just turned 40, man. I've been programming for way longer than 10 years. I just entered my second decade of working on this stuff. That's pretty funny, man. Getting old over
right.
here.
Hey, you come with even more experience than we
More experience. Exactly. That's right. And yeah. Thanks for having me today. This is gonna be really fun.
Yeah. So before we get started, can you just give our listeners a quick overview of Bitwave's mission and the services that you guys provide?
Yeah, absolutely. So Bitwave, we've been around since about 2018, so almost 6 years at this point, which is crazy. And we started with one simple mission, which is to enable digital assets for enterprises. So it's we're incredibly well known for our accounting software, our tax, the payment stuff we're doing. But honestly, when we think about this space, we look at this in terms of when a business decides to bring digital assets onto their balance sheet, they just create a whole bunch of problems for themselves. And we aim to help them with all of those various problems. So the first focus that we have is, of course, the CFO stack. So that's the everything from the controller's office to the treasury office to the CFO himself and how he's doing reporting. But we sort of always keep our eye on all the other parts of the business that are rapidly changing and how that's all kind of going. So we are first and foremost kind of enterprise software people, and that's where we like to play. And we all look forward to this world where the Walmarts and the Microsofts and all these guys are working with digital assets, and that's the kind of level of software that we tend to build.
That's awesome. Yeah, we got some good adoption here in Costa Rica, and being able to pay with things and have those payments integrate with the banking system is great. But it'll be great when as you're saying, it's more ubiquitous with the bigger players in the States as well.
Yeah.
So what inspired the creation of Bitwave? Like, what got you started in this industry?
Yeah, it was actually pretty easy. So I got into crypto about 2010. So I've been in crypto forever. I love crypto. I still remember the first day I read the Bitcoin white paper. It popped up on Slashdot, which was like an old Hacker News kind of thing, and it immediately resonated with me. So I kind of got into it right away back then. That's when I did a little bit of code contribution and things like that. And but unfortunately, like back in 2010, there really wasn't enterprise software play to make around crypto. Like the companies that you could start in 2010 were either exchanges, which are very retail focused, or custodians, which maybe were a little bit less retail focused. But back then, custodians was a totally different ballgame. Like I don't know if you were in the crypto space back then, but there was a company called Zappo. There was a Swiss company that their foray into custodianship is they bought one of those Swiss bunkers in a mountain, and they had these like air gap machines with like guys with guns around it. So like before MPC and before a lot of the tech that we take for granted today, custodianship was a guys with gun business, which is not really the business I ever wanted to start. And then obviously exchanges were retail. So 2010, there really wasn't a lot of like enterprise software startups to start in the space. So my co-founder and I actually started a different company that was in the enterprise search space. But fast forward 2017, uh, we looked around, and 2017 was the summer of ICOs. Like I think about crypto in terms of the summer of, like, 2017 was the summer of ICOs. That's when Chainlink did their ICO. It was 2 years after ETH did theirs, but there was just everybody was doing ICOs back then. But there was a surprising number of companies back then that actually were real companies. So as opposed to before 2017, when most companies were, no board of directors, no physical mailing address, yeah, stuff like that, which Binance still kind of is like that, but that's a different issue. There was finally actual companies that were really getting to the space, that were incorporated in Delaware. And so Amy and I sat down, my co-founder and I sat down, and we said, like, well, let's just go through all the problems these companies are going to run into. And that turned into a list of, like, it was a PowerPoint that had like 40 or 50 items on it. And the top of that was accounting and tax, because that's something that it's really, really hard to do. I had a little consulting shop back then that I was accepting crypto, and it was a pain in the ass to actually take crypto payments. And then, but then right below there was things like payments and financial operations, and FP&A in this world gets to be really, really complicated when you're doing FP&A that's not just around it's not just revenue analysis, but also forex analysis overlaid on top of it, which is obviously very complicated. So we came up with this list, and we went out and we started testing it, and we found a great market, and we built what I think was really the first, like, comprehensive solution to this piece. I like to think that we really invented a lot of what is known as, like, the crypto subledger space today back then, because we were just so early on in the space. Came up with, like, all the terminology, all that kind of stuff that folks use. And that was sort of the history. And then we just started growing and growing and growing.
Yeah, it's interesting that, like, these tools, we forget. I mean, some people forget sometimes that they're accounting tools at their heart. They're ledgers. That's what they are. And so it's funny that, or I guess it's a little ironic that it's so hard to account for things on chain. But you're right, it's a huge challenge, just because there's so many different types of things that can be happening on chain. And so parsing those things and parsing the different sources is really key, and keeping that all organized is a key aspect of it as well.
The way I talk about this is that crypto accounting is two really hard problems in one, that I think people don't always kind of appreciate. Which is, the first problem is, it's a data problem. It's a very, very hard data problem. Which is, I think we index something like 10 petabytes of data across all the different blockchains we work with, all the different exchanges we work on. I mean, it's a phenomenal amount of data that we're sort of talking about here, pricing data and everything you do. But so you have this really hard big data problem, but then you also have a really hard accounting problem, because it is incredibly non-trivial accounting challenges. Especially now that we're getting into, like, the FASB 2024 stuff. I think everyone in some ways wants that to have simplified it, but it absolutely did not. Like, the first cut that FASB did, when they added in fair valuation, it actually made things a lot more complicated, because you have to actually layer in fair value for certain assets, but still do impairment on other assets. And so you have this I mean, no one does that. That is not a thing that there's not a single other industry out there where people, I mean, like, impairment itself is one of those things that I think you talk to 10 accountants, and 9 of them have never done impairment. They would not know the rules to impairment, because why would you? Like, what bookkeeper does impairment? Like, there's like 3 things that are intangible assets that sit on your books, and no one ever impairs. Like, the only person that ever impaired down their domain name was FTX, and like, besides Enron and FTX, I guess, are the two there. So, like, besides those bookkeepers, no one else has ever impaired a domain name down. No one, like, you do a little bit if you're doing M&A, but again, M&A accounting is really specialized. So it's not like every bookkeeper you work with is doing M&A accounting. So it ends up being this really interesting thing that, like, no one does this stuff, and then no one does it where there's no predefined rules. So the fact, even like FASB 2024, it didn't simplify anything. It made it so much more complicated, because now you're doing both impairment and fair value on top of these assets. And having to track more things in terms of restricted access tokens and things like that. So it is a really interesting world that we kind of live in, where It is two incredibly hard technical problems that we've kind of solved. And then now we've obviously layered in a lot more on top of that, including institutional problems, which is how do you deal with reconciliations at scale, payments, which are very, very complicated in the crypto world. We think of payments as really easy, but we'll talk about this more later. But payments actually are really hard in the crypto world. Like it's one of those things that like getting it right. We have 100 years of how do you do automatic categorization and cash application on invoices from the traditional ACH world, and now we're having to ram jam all of that work into a year and a half of like getting it done in the crypto world. So
Yeah. I mean, we've been trying to set up like a recurring crypto subscriptions payment for our community, and like even that's a nightmare to try to set up as well, because you have to force people to lock stuff up into a smart contract and all that. So yeah, lots of complexity here for sure. So could you talk a little bit about the specific challenges that enterprises face in digital asset accounting, and how Bitwave addresses those challenges?
yeah, I think so. The first challenge is one of experience. Like you go into a lot of the enterprises that we sell to, and it is not the accounting team that is driving adoption of digital assets, right? It is the Web3 team, it's the CTO's office, and it is the accounting team is getting their excuse my language, getting their asses dragged, kicking and screaming into the 21st century. And so first and foremost, like you have to build a product that works with an accountant's mind and doesn't like overload them with crypto terminology and expect it. So like, one like we for a long time didn't even have like a dark mode because none of our accountants would use dark modes. Like you don't put that in front of a Fortune 500 company. Like no Fortune 500 accountant is like, oh, all I want in my life is a dark mode. Like NetSuite, like just do our dark mode, guys. Like, and so there's funny things like that where like you design the product to work like how people think that are in those positions in those jobs. And of course that scales. I mean, like even the bookkeepers we work with, like whether you're working with a small company like Pudgy Penguins is a client of ours, love them to death. They're amazing. If you're working with them, they might have people that are more crypto savvy. But honestly, the first accountant that most of these companies hires is not a crypto accountant because there's not that many. There's 100 crypto accountants. They're like really, really sophisticated crypto accountants out in the world. So if you're a growing enterprise like Pudgy and you go out to hire an accountant, like you're not going to find an accountant that knows crypto. You're going to probably hire someone that doesn't. So whether you're working with the Nikes of the world or you're working with the Pudgies of the world, both of them have to have a foray into this that works with the way that their brain as an accountant works and matches the terminology they expect, all that kind of stuff. You have to make data very accessible. That's again, no one gets into crypto accounting is used to the scale. Like if you go work for Walmart, you anticipate, like if you go to RevRec at Walmart, you anticipate that there's real scale there. Like that's, you're getting hired for that job. You're coming onto a team with probably a couple hundred people that do nothing but RevRec at Walmart. And you are like, okay, there's probably like real scale here, and let's see what happens. You go and you work at a company that's been around for a year and a half that has that is a whatever 20-person company and you're their first finance hire. You're not expecting them to be doing more transactions than Walmart, but that's where we are. Like you look at most of our clients, like most of our big clients like Magic Eden, Hedera, these guys. Hedera does 50 billion transactions a year. I back of the napkin Walmart, and I came to like maybe they were doing 5 billion transactions a year, maybe something in that range. Like there wasn't a lot of public information about that, but let's pretend that like maybe I think that's magnitudinally correct, even if it's off a little bit. Uh so we're talking about a company doing that Walmart's been around for 100 years. They have 1,000-person finance team, I'm sure. They probably spent over $100 million with SAP, maybe annually, maybe every couple 3 years. And they're doing a level that is an order of magnitude less than like a client that had like Adara that has literally, two or three finance people on the team. And so what you're being asked to do is unbelievably more difficult. Like you are being asked to actually process and handle a volume of data that is inconceivable to most accountants. And you're actually in a lot of situations like the accountants are being asked to be more like data engineers. Like they really are. Like when they're because it's hard to do a bank rec when you have a billion transactions. Like you can't just open a statement and like look at it. You have to think about those problems very, very differently. So the experience of the folks that are out there and getting them trained up on not just Bitwave but on crypto accounting in general. This is where Bitwave U and EDAS, all the stuff that we do is all about getting more and more people to understand how crypto works, and then the scale of what they're working on, and then finally for us is just the complexity of their problems is really quite challenging. So most of the folks that we deal with have split books. So I mean, obviously, like this even gets to like folks like Pudgy. Like as Pudgy wants to go, start getting audited, or if they want to go public, that's I don't know if they do or not, but like they have to start. They're going to have two sets of books they have to keep, and that is not again like this is one of those things. Like 9 out of 10 bookkeepers don't keep split books because they don't care about tax. Like they take their P&L report, they ship it to their tax guys once a quarter, and that's what tax is. But suddenly with crypto, there actually is this deep expectation that you are keeping two sets of books in some way, whether you're explicitly doing it or you're keeping it as like as an adjusting ledger on top. You have to have that. So we have to like you're taking folks. This is where things just get so interesting because you're taking folks that are oftentimes younger because those are the accountants that love crypto. You have to upskill them into crypto. You have to upskill them into data, and you have to upskill them into accounting that they probably have never done. Impairment, fair value, keeping split books. Like you have to take someone who's younger in their career and enable them to do all this stuff. And that's the challenge. That's how we sort of look at this. Like Bitwave, we work on the hardest problems. We work with the biggest clients. We have the best names. And a lot of this just comes down to like, how do you get these folks geared up to handle this challenge and have software that basically makes their life as easy as possible?
I heard a good analogy that sounds like when you're describing the tool. The ethos of your tool is like, uh, you know, German engineering in cars versus Japanese engineering in cars. Everyone says German engineering is the best, but if you have to do things a specific way and you have to know about the car and like and follow all their rules, right? Versus Japanese engineering, you just they know how the end user is going to use it, so they just like they end up lasting longer because it's more ubiquitous to the actual person that's going to be behind the software. So
Yeah.
on the user end. So
Yeah, it
that's
is.
kind of it.
And honestly, like where it is today is a lot of it is does feel like German cars because there's just so much specialization. And a lot of the goal for all of us is to actually get to the point where this becomes a little bit easier. And because anyone can pick up a Toyota and drive it, fine. And, but not many people can pick up a 1969, Porsche and drive it, well.
Yeah,
So like that's it's about kind of getting that level for everybody where it's not these specialized tools. It's kind of like getting more accessibility to them.
mm-hmm. Cool. So you've talked about Nike, Pudgy Penguins. Can you talk about any specific kind of implementations that you did with any of these companies, or case studies where something like worked out really well, or anything of the nature like that?
Yeah, and I love, we can talk about tons. And if you guys go to our website, bitwave.io, you can check out case studies there and all of that. We have a great case study with OpenSea. OpenSea has some really challenging problems because they, for the first part of the lifetime of their company, OpenSea really, busted out in about 20, gosh, now I'm feeling like, I guess 2020 was the summer of NFTs. No, 2021 was the summer of NFTs. 2020 was the summer of DeFi. 2021 was the summer of NFTs. 2022 was the yeah. So their original smart contract, they hadn't automated the royalty payments piece of it. So this came, if anyone has worked with NFT marketplaces, I don't know if I think we work with most of them, but they have this challenge where basically they support royalties. So when a trade happens in the exchange, a portion of the sale price goes back to the content creator. When OpenSea first started, they were actually doing that all manually. So what would happen is that all of the money would come to them, and then they would pay out all of it. And this was just, I mean, they were the first to do it, so they had that challenge. So part of the implementation there was not just handling, I think they were doing 50 million transactions a year, where they're all sales. So there's 50 million sales a year on chain. They get whatever, $1 per sale. So it's this like really complex revenue recognition there. But then they also, when we first started working with them, they were also picking up a liability off of that, where then once a month they had to calculate those liabilities, track them. They had different royalty tables, and then so they had to track token-based liabilities, which is incredibly complicated. We built a bunch of tooling to do that. So we have, in Bitwave, you can actually create an invoice. So we'll both, like, the way Bitwave works is you can both sync invoices in from your ERP, but you actually could create an invoice in Bitwave that's token denominated, and then we'll allow you to push that up to your ERP at fair market value, and then even pick up adjustments on it later. So some really cool stuff around there. So we would allow them to create token-based invoices and then track liabilities, pay the liabilities out. That's when we started to get into payments. I mean, we've been really bullish on payments for a very long time, but it's been, I mean, it was honestly, seeing OpenSea operate back then, it was a real eye opener to us, because it was so obvious that, like, they had these token-based liabilities coming up. They had to pay them in bulk because they were paying out like thousands of content creators. All of those are really, really hard problems, in addition to all the accounting problems, which are insanely hard, in addition to the data problem, which was insanely hard. So they just have these stacks on stacks on stacks of hard problems that ends up being really fun. The other one I do love talking about Hedera, just because it's a volume. Like, they, basically Hedera makes a tenth or a hundredth of a penny per transaction on Hedera. Hedera does, it's, I don't know, billions of transactions a month. And so you're basically doing rev rec across billions of transactions a month. And that's, how do you roll that up? How do you scale for it? How do you track it? How do you rec it? I mean, it's like, rec on that ends up being tricky. Like, how do you know you're not missing? And if you are missing something, how do you find what transaction you're missing?
Those are awesome. Yeah, that's great. So kind of going into some of the more regulatory challenges that are surrounding this industry, how does Bitwave enable its users to stay on top of everything, like all of that stuff with regards to technology and regulatory compliance?
Yeah, it's one of my favorite parts about Bitwave is that we've been around for so long at this point that we've seen it all. Like, I can't tell you, the first client, or maybe the second or third client we got was doing cost averaging, because they were, for folks that are in the space, the history of this is that very, very early on, there was, before a lot of, like, well, certainly before all the FASB guidance, but even before, some of the guidance from, like, Deloitte and those guys came out, people were treating this like Forex. And so if you're doing Forex accounting, you're obviously doing cost averaging on your inventory. Like, you don't do lot level tracking of Forex, you do cost averaging. So, like, when we first built Bitwave, the first gain loss runner we built was FIFO, because that's obvious. But then the second one we built was actually for cost averaging. And so, we end up in a situation where, like, we, so early on in our life cycle, and I'm talking about like 2018, when we were just getting going, we were already getting asked for different ways of doing treatment from almost every one of our clients. And that is it, and it was so pervasive. Like, different people want different wrapping treatments. They want different ways of capitalizing fees. Some people wanted to capitalize fees. Some people did not want to capitalize fees. Some people wanted to allow you to wrap tokens. Some people didn't. That we ended up building this model, and this, I think your folks will appreciate this. The folks who are listening, the way that Bitwave kind of works is that, you get your list of transactions, and that ends up, as you go through and do categorization there. So you book something as, debit, digital assets, credit, revenue. You're essentially building up a base ledger. And then what we do is, instead of modifying your transactions with cost basis or gain loss information, like I think pretty much all of our competitors do, what we do is we actually have this model called inventory views, where you create a set of adjusting ledgers on top of your base ledger, and you can have as many of these as you want. So you can have 100 different inventory views that are using the same set of transactions. So it's the same set of base facts, but they're interpreting them differently. So when we go and we do something like wrapping treatments, instead of you as a user having to actually say that a single transaction is a wrap transaction or not, what you do is, in your inventory view, you specify what assets you want to treat as wrapped and what you don't. And so that way you could basically have a tax view that does wrapping treatments, because in the tax world, wrapping is still okay. And I think a lot of people still do that. And so you do a tax view that's going to be FIFO, no revaluation, so it keeps it all a cost basis. And then it does wrapping for WETH and ETH and WBTC and stuff like that. And then you can have a separate view that's the exact same thing, that's for US GAAP, which will have impairment, will have wrapping turned off, fair value for 3 assets, impairment for 100 assets, and those two can live side by side, and you can run those whenever you want. And then as the thing that's been really cool about that is that when the rules change, you just spin up a new inventory rule, and so a new inventory view. And so like when folks are going from US GAAP 23 to the FASB, the newest FASB guidance, they create a new inventory view, set a couple of flip a few switches on there, and then they're done. I mean, it's for most of our clients, upgrading to FASB 2024 is a 15-minute process at most. So we just, it's one of those things that the scale of companies we deal with and the length of time we've been in the industry, we just think about this problem very, very, very differently.
Very cool. Yeah, I think that it's important to be on top of that stuff and to be able to have different views of that and unlimited different views of that as things change is really cool to be able to flip those switches and things like that. I'd like to switch gears a little bit now and talk a little bit about the Enterprise Digital Asset Summit that you guys host, and just kind of how to get an overview of that and what makes it unique as in the digital asset space.
Yeah. So we were really the first folks to host a finance focused digital asset. We did this 3 years ago. So this is our third year doing the summit. We traditionally have been doing it around consensus, but this year we're doing it around BTC Nashville, which will be super fun. The goal of Enterprise of EDAS has always been to bring together like-minded individuals who are thinking about how we increase the enterprise and business adoption and institutional, of course, adoption of digital assets. And that's a lot of it is around accounting. A lot of it is around everything we've been talking about here. How do you stay up with the most up-to-date regulatory frameworks, all that kind of stuff. A lot of it is about thought leadership. Like last year, we had the folks from one of the streaming payment. You're talking about subscriptions. One of the streaming payment providers came and talked about this from a thought leadership perspective about how streaming payments are going to hopefully one day change everything. Now I think we're all still waiting for streaming payments to really hit, but we do want to see that happen, and we're excited. So it's a combination of the absolute top of the line thought leaders in digital assets, from David Bird from EY, Rob Massey from Deloitte. Rob Massey is a good friend. We work a lot with Deloitte. They're amazing. Through folks who sit on the FASB Council, everything from there. We bring everyone together. We have them share their ideas, share what's working, what's not. We do product updates from Bitwave, and then we also do a lot of thought leadership about what kind of adoption are we seeing in the industry? What are we seeing in terms of payments, in terms of NFTs? Like how's the state of NFT going? So it's really it's a place for folks that are interested in how businesses are using crypto to get together, learn about it, get some CPE credits. That's a big bonus. So we got CPEs on that side. Get some CPE credits and manage the entire life cycle there.
Nice. And I think you mentioned it's going to happen in Nashville this year.
Yep, Nashville. It's the day before. It's the Wednesday before Nashville, the BTC Nashville. So it's going to be, I believe that's the July 24th.
Very cool. And that you started to list a couple of people that might be involved. Can you highlight any other key sessions or speakers or topics that you guys are going to have at this year's EDAS?
Yeah, I mean, so I think one of the things that I always love, there's two sessions that are always fan favorites. The first is we'll get together some of the CFO leaders from the companies that we work with, and as for them to sort of talk about the state of the art for automation around digital assets. So that will undoubtedly will have the CFO from Hedera on there. Probably folks from OpenSea, the people who are kind of working on the hardest problems of digital assets. We get them together to just talk about what are they seeing, what's working for them, how do they run a scaled digital asset organization? Because a big part of what we do at Bitwave is it's not just, I always talk about Bitwave as really funny. Like if you just want to get your books closed as fast as possible, it's sort of like if you want to be more of a retail guy, do this stuff with spreadsheets, use one of our competitors, look at the other folks that are out there. If you want to do it right, that's where Bitwave comes into play. So for us, someone like Hedera is a great example where they are doing, billions of transactions and they want to basically handle it correctly. They need to handle it with, in a way that they can get audited, because they do get audited every single year. They need to have incredible high fidelity, incredibly accurate. So that's where Bitwave comes into play. And scaling that is really hard. So like scaling a highly compliant, Gap, running a Gap house for accounting, and scaling that to billions of transactions is incredibly complicated. So I love the sessions where we get our customers together who are doing the hardest accounting that's out there, and we get them to talk about how they're doing it. The second session that I always love, which is this is more of a pet one of mine that I love, is we always get together CPAs who are in outsource accounting firms. So these would be folks from like Propeller, Fuel 3, Cipher Counts. We get them together and we talk about what their life is like right now. Because outsource accounting is always a hard industry. Like outsource accounting is a really, really, really tough industry for folks that are in that space. I think it can be pretty lucrative, but it is, folks are always mad at you. You're always under the gun to get your books closed. Your customers are doing stuff that they don't tell you about. So someone goes and does especially in the crypto world, someone goes and puts something into some crazy DeFi pool or whatever it is. You're something like, what the hell is this? Like, how do I deal with this? And so it's a very underappreciated kind of like part of the industry. And so we love to get them together. It's one of my favorite things is we get our best partners together and we let them just talk about, how are they staying up to date? How are they dealing with their clients? What does business development look like in the Web3 space? Like, how is the bear market or the bull market infecting them? All that kind of stuff. So
Mhm.
those are two that I always look forward to. And then we'll have some great tech talks, probably from some of the folks from the L1s and L2s that we work with. Really, really, we're pushing the boundaries of the technology here, because that's where we get really excited. Also, is like we're all waiting for that day that we start to see mainstream adoption. And like EDAS is a fundamentally it is a conference about people who all want to see mainstream adoption of digital assets. And so a big part of it really is, what are the mainstream use cases we're seeing? When are we going to see McDonald's start to use this? All of that.
Yeah, cool. I mean, I'm excited to check it out. So what future trends and innovations in on-chain finance do you see as the most impactful for enterprises as a whole?
Well, right now we are doing a ton of stuff on payments. I think payments is the absolute. I think that the way that the majority of people, so we already have, I don't know, let's say 100 million crypto users. When we go from 100 million to a billion crypto users, it will be the next billion will not realize they're touching crypto. That's sort of like, it's the way it always works. Is like the technology moves in such a way that like the next step has to be that it can't be someone downloading MetaMask and signing messages and all this kind of stuff. It has to be through other means possible. And honestly, the number one place that we're starting to see that is payments. So this would be, Pay USD, PayPal stablecoin, USDC, all the stuff that's happening around there. I personally think that B2B payments are kind of the first bulwark to fall there. And in particular, like I think a lot about international remittances. When you're doing international remittances, I as a kind of crypto native person, I don't think there's a company that I dislike more than Bill.com. Like it's one of those companies that I just cannot stand their business model, because it feels so exploitive in some ways, right? Because they take bites on like every single side of the apple. They charge you a licensing fee. They charge you a per transaction fee. They hold your transactions for an extended period of time, so they are making a float. They're making a float on it. If they're going to forex, if they're going to a foreign currency, they charge you a spread. Like this is the most miserable thing in the entire world. It just annoys me so much. And so for us, like payments are one of these like absolutely easy to imagine disruptions of digital assets, which is where it is instantaneous. There is no bips. There is no float that someone is trying to capture. And it's 10 times faster, 10 times cheaper. And you can move $1 billion around the world for 7 cents on Polygon. I mean, it is just so different. So we're really doubling down on payments this year. We've released our enterprise payments product, which we partnered with Coinbase on, which allows you to make payments. It has a full deep integration with your invoicing system. So whether you're using NetSuite for invoicing, it'll pull in NetSuite invoices from NetSuite. It'll work with tools like Coupa to actually do crypto vendor management. So even like when you start thinking about crypto, every one of the processes we do has to start to get rethought. And even vendor management is one of those things because we're all kind of used to how ACH's work, where you get like a penny test and you have to approve the penny test and all that kind of stuff. Crypto is a different world, and it's also like highly variegated between really savvy crypto users and really unsavvy crypto users. So like a bunch of the people that our customers are paying are just using exchanges. So you can't like we all think about in the perfect world for crypto payments, in order to prove that I own a particular address, you actually need to go and sign a message with that address. That's how everyone wants. You just want to open up your MetaMask, sign the message, you're done. But you can't do that with exchanges. You can't do that with custodians. So we've had to build tech to actually mimic kind of this penny test model so that we actually can make sure that someone who is maybe not a super sophisticated crypto user is not going to send $100 million, like $100,000 into the 00 black hole or something. And that's, I mean, at this point we are doing millions to tens of millions of dollars a month on our payments platform. And where we fit into all this is we're not taking bips. We're not there are places that we will do fee based when it comes to the invoice recognition side. But for the most part, it's a per user per month plus a module cost. All you can eat as much as you want to send around the world. And then what we really do, that's the hard part, is kind of like pulling together Coupa, NetSuite, pushing the bill payment piece back up into NetSuite, marking it as paid, calculating your Forex gain or loss off of the invoice delta, separate from your accounting or tax gain or loss that's happening off of the disposition of coins. So there's, Bitwave allows you to have two different gain losses, both one gain loss that's on the asset itself as you're paying a bill, but then the other gain loss is going to be the Forex gain loss based on the movement of the currency between when you got the bill and when you actually finally paid it. So lots of complexity there. We're super excited about it. We expect to see a lot of stuff happening there, including, and Taylor, we'll reach out separately, but including some stuff around subscription payments and all of that, and some things that hopefully will make that I don't know if it's ever going to be the easiest process in the world, but make it more palatable for people that are locking up assets, because that's where it gets really tricky. Is
Right.
If you're having to lock up 6 or 12 months of assets, it's not always the best thing. We've got some solutions around there. So
Very cool. Yeah, I think that people want it and people expect it when you're Web3 native to be able to pay a subscription in crypto, and it's just like there's challenges like you described. You have to lock up funds as of right now. With the tech the way it currently is, and so it feels like you're paying it all up front and you kind of are, in a way. So it's like, why not just pay once?
Yeah, exactly.
Yeah.
I'd be remiss also, I haven't mentioned it, but one of the other things that we do a lot of is institutional. So this is working with the large banks, the large exchanges, folks like that. So like Coinbase is a customer of ours, and like, there's a bunch of the different banks out there. And so they have very, very different challenges than what you would think of as like the day-to-day accounting. And in fact, a lot of the challenges the big exchanges run into are not accounting based. They're SAB 121 is a really good example of that, where that is not an accounting problem. It kind of is, because you're supposed to be you're tracking liabilities of client assets, but it's a big data problem. It's a data integration problem, and it's a problem of how are you actually tracking these assets and reporting out to these compliantly. So one of the things that we launched this the month after FTX. We got our our advisors and the brain trust together, and we put together a product offering that's really focused on like, if you are an exchange and you don't want to be FTX. And I always joke about this because like Amy, my co-founder, has literally, I mean, she tried to sell FTX for years. Like since FTX started, every month she sent sbf@ftx.com an email, and he replied to a lot of them. Like there was a lot of like emails back and forth between them. And we had some shared investors and things like that we were talking about. But every time we tried to sell them, he's like, no, we're good. And like, well, yeah, I mean, I guess that makes sense. Like maybe we should have shorted that stock. Maybe that's
right.
one way to look at the world. So
Yeah.
we sort of got the brain trust together. So like, well, if an exchange actually didn't want to go the FTX route and actually wanted to be good, like what's the set of tools that they would need? And so that was Bitwave Institutional. It's an entire set of like really complex reconciliation tools that you could kind of think of like Blackline in terms of that, reconciliation tools, data tools for getting data, SAB 121 reporting tools, so like the ability to track client by client assets, all that in one place, and then the 1099 stuff that's happening this year, which is tracking client assets and then actually doing gain loss reporting on that to do 1099s for them. So we have a whole institutional product that we work with the big boys in the space on.
So you mean QuickBooks isn't enough for what you're
150
doing?
150 QuickBooks instances, which like, you say that and you're like, just, I mean, you're just like, what the hell? Like, I can't even imagine that. I mean, that would be so miserable, even from purely, even if you were trying to do it, like, even if you're not trying to do it right, that's still miserable. That's so much
Yeah,
extra
yeah.
work. Just do one NetSuite instance and lie to your NetSuite instance. Don't lie to 150 different QuickBooks instances.
Insanity, insanity.
Yeah.
So as far as the future of Bitwave and just digital asset accounting in general, what's next for Bitwave in terms of product development? Like, what are you guys working on? What are you excited about? It sounds like payments is one of those things. We've highlighted, I'm sure, of a lot of the things, but any partnerships or new product development in the works?
We've got some really exciting partnerships coming. I can't talk about them yet, but they'll be dropping over the next few months here. Very, very exciting stuff. All like right now, this month, I think this year we're really, this is going to be a payments heavy year. I mean, it just is the nature of the stuff is the payments are. So if anyone is looking to do AR AP, we have a full module for both AR and AP that allows automatic invoice matching, automatic bill pay matching. Like a lot of the future of this stuff continues to be more and more automation. So for us, like the first generation, again, we invented this stuff. The first day we did this, it was all manual, and it was just getting over that hump of like, can we even do this? And then it's slowly been more and more about automation. And now we're getting to the point that where we are today is that more and more of our customers are saying like, hey, I want to get with one of your competitors, we're running a 20-day close process. Can you guys get us to a 3-day close process? And that's where most of our big clients are, is at a 3-day close process. So like that's where we are looking there, is like, how do you add continuous closes, continuous checks, continuous balance checks, all the stuff you need to be doing. Let's move that from a discrete close process that takes a bunch of time into continuously running processes. Let's get every single thing that you can do in Bitwave should be automatable. And that is probably the biggest set of things that we're kind of doing. And that gets into the payment stuff too, because like you want to be able to go in. We did this really interesting study where we looked at the number of clicks it takes to pay an ACH bill in NetSuite versus how many it takes to pay a crypto bill with Bitwave. And we were able to get down to be basically half the number of clicks as NetSuite. And so this is just a great place, like, because crypto should be better. Like we should be able to automate this stuff better. We should be able to do all these things better. And we're finally at the point where we're actually getting to do that kind of automation work, which is super fun.
It's programmable money, right?
It's programmable money. And then scale. I mean, just scale continues to be the hardest part about this. So, we continue to work hard on like, how can we run reports? I think right now we run, reports for 100 million transactions in like a minute. But even that like feels slow for people using it. So it's like, how do you get those reports better? How do you just increase the scale of your system? All of that.
Cool. So what advice do you have for finance professionals that are looking to navigate the digital asset space?
There's a bunch of advice out there there's sort of like generalized advice, and I'll let you do that. Like go to Bitwave U. So this is at university.bitwave.io, where we have an entire certification course for folks who are looking to learn this stuff. Crypto CFO is obviously a great resource as well. But the number one difference that I see between people that get it and people that don't get it comes down to whether they themselves are using crypto. It honestly always comes down to this, is that you as a bookkeeper, you need to play around with this stuff. Like every firm that's out there, we always say this, and I don't think any of the firms do it yet, but maybe a couple of them do. Every firm that's out there should be taking a couple $100 a month and giving it as crypto to their folks to go and play with the newest stuff, play with L2s, play with ZKs, play with DeFi pools. Like if you're not doing this, you don't understand. It's really, really hard. Even with Bitwave explaining it, like it is really hard to understand what a deposit into a liquidity pool is if you haven't done it. And if you don't know what a liquidity pool is if you haven't gone and traded one of these, because they're such foreign concepts. Like the idea of a liquidity pool is so separate from anything that anyone's ever seen in the trading space, that if you don't go and play around with it, you will have no idea what you are accounting for. So that's my biggest bit of advice. Besides, go to university.bitwave.io and do our certifications and stuff like that. My biggest bit of advice is you got to play with this stuff. And if you can get your boss to pay for it, that's even better.
Right. Yeah. That's what we created the Trip Around the Cryptoverse course around that. That idea that, with $25 on Polygon, you can mess around with,
You can
a
do
lot of the things
anything. You
yeah,
can do
right.
anything in the entire world.
Right. You got about
Yeah.
20, 25, maybe 250,000 transactions you can do there, and probably more, lots of transactions, right? And smart contracts and all that stuff. So, yeah, it's when you have these L2s with super low fees, you can go and mess around and deposit liquidity on a liquidity pool, do some swaps on a DEX. You can,
Yep.
you know, leverage lending and borrowing protocols and
Yep.
see what that all
Borrow
looks
a
like on
buck,
chain.
pay it. Yeah, borrow a buck, pay it back. Like just
Yeah,
play around to sort of see what's
yeah,
actually going on, because that's the only way you're going to understand how these things all work. Yeah.
yeah, completely. And so how do you envision the role of digital assets evolving within enterprise finance over the next few years? And this is my last question, and then we'll just close things up after this.
Yeah, Deloitte talks about this too. That Deloitte says that they don't have a single Fortune 500 company that's not looking at digital assets right now, and I think that that's incredibly prescient. I mean, if nothing else, I think we'll start to see payments move to digital assets for the pure remittance piece of it, just as a cost saving. Like if you're moving $1 billion around and you can save 10 bips on that, that's real money. So I think that we're going to start to see the payments, whether or not the crypto companies realize it or not. And so, I'm sorry, the Fortune 500 companies realize it or not, we're going to start to see that really start to change. I think it's inevitable we start to see real supply chain stuff. One of the things that kind of kills me about the industry is that I feel like IBM has set so many different industries back like 5 or 10 years that it's hard to even like talk about. IBM, I swear to God, set AI back 5 years because when they came out with Watson, and it was like completely underwhelming. It was a consulting project, like it didn't do anything at all. It literally made people that much more skeptical as LLM started to come and all these other things started to happen. And the same thing happened when they did. So IBM had the big deal with Maersk, where they did the big supply chain deal with Maersk. But instead of like being smart about it, they built it on Hyperledger, which is a totally permissioned blockchain. And the problem is that like if you have a third party building a supply chain management tool, it doesn't matter if you build it on a totally private blockchain or a database, doesn't matter. Like the day that you are totally private, you've given up all the benefits of blockchain. Like it just doesn't make any sense. So
Mhm.
we're finally starting to see people like climb out of that hole and look at how to do supply chain on public ledgers, because the trick for supply chain, it's never going to be about tracking the assets. Like tracking the assets is good. That's an important part of it. But where blockchain revolutionizes supply chain is when you combine the tracking of assets with the release of funds. And that only happens on public networks. Like it only happens that like, where a pallet comes into to a Walmart, you scan it, and then that releases funds from Walmart to the shipper to the longshoreman to the factory in Vietnam that made the screws. Like this idea of actually being able to do programmable release of funds across supply chains is incredibly powerful. And like that was not what they, when IBM did the Maersk deal, all they were trying to do was track, where's a shipping container, and that's not the hardest problem that we all deal with. We got big databases for that. And so that's the part we're finally starting to see people get serious about supply chain as it relates to actually release of funds and real money moving around, because that's where we're going to see really, really cool stuff. So, and even that, I know I'm a broken record. Even that's a payments problem. Like, even that is a fundamental payments problem of how do you release payment for something without having, like, you think about Walmart's AP team. I mean, it must be 1,000-person team that manages the entire life cycle of paying bills and all that kind of stuff. And so if you can actually get them to cut that team by 3/4 again and cut their bips on what they're paying, that's real money. So
Mhm.
that's the stuff I get excited about.
My dad, he used to own a business. He just retired, but his business was always pay when paid. So he would get paid after the subcontractor that he was contracted by
It's
would get paid.
brutal for small businesses.
But he would get pissed off because they would try to use their terms, or they wouldn't pay him till 90 days after they got paid. And it's like, if you could have it so that it was programmed into that original payment that the other
Yep.
people down the stream would get paid, you know makes things easier for everyone. And, it's more transparent too, right? And
It's
that's
more
why we need those
transparent.
public.
It's just clean, and it's just cleaner. I mean, it's just one of
Yeah.
those things, like it's just cleaner across the entire board, and it helps everybody. It makes and then the accounting's easier. Like you do that with something like Bitwave, like Bitwave would be set up to automatically recognize all the revenues, the liabilities, the payments that go out on the other side of it. So you would have you would see this transaction where you got paid and then immediately release payments, and both of those would get booked to your journal automatically. I mean, it's really, really cool stuff that can save a lot of time. But we got to kind of get there. We got to get it so that your dad, I don't know what kind of business he's in, but like we got it so that your dad could have actually taken advantage of it, which we're nowhere near where I can only speak about my dad. We are nowhere near where my dad could take advantage of that.
Environmental drilling. So like no
Yeah,
chance.
that's probably not too much. Although
Yeah.
actually the drilling stuff is like a lot of the oil stuff too is another great use case for the crypto. Like, so
Yeah.
yeah.
Yeah. So, any final thoughts or key messages you'd like to share with our listeners, especially those interested in the intersection of tax, accounting, and digital assets?
Well, check out Bitwave, bitwave.io. Check out edas.live. We'd love to have everybody here. It's going to be a really, really, really fun show. Thought leaders from across the industry, people looking forward, people looking backwards, talk about FASB, all the stuff you know and love. And then, yeah, no, that's it. Thanks so much for having me.
Yeah, it was a pleasure, and we're really glad to have you on. And thank you again for coming.
Awesome.
All right, take
Thanks,
care.
everybody.